day. Welcome to drboystv.com, the home for intelligent Black people. My name is Dr. Boyce Watkins, and I want to say hello to everyone. I hope you're doing well. I hope you're happily investing, and your life is going well for you. Now, I want to jump into something that I just saw with Wendy's that was pretty alarming for me. Wendy's is shutting down hundreds of stores, between 200 stores and 250 stores. And it all apparently relates to the fact that they are struggling big time. The brand is, to the surprise of many people, really getting their butts kicked, and the competition's taking them out. Consumer pressure, because we're sort of moving into what Kathy Wood refers to as a rolling recession. That's taken a big toll. So their same store sales have pretty much dropped quite dramatically, and basically they're going to close all these stores by the end of 2025. They reported same store sales dropping by 4% the first 9 months of 2025. Overall revenues down 2%, net income's down 6%. A lot of the stores targeted for closure are the ones that are described as outdated, underperforming, or dragging brand standards. And the way they're trying to address this issue is with something that they call Project Fresh. Now, Project Fresh is a turnaround plan for Wendy's that they're implementing, where their goal is to try to fix some of these underperforming locations, to basically deal with the fact that some people feel that their brand doesn't look, as powerful as it used to be, that it's kind of lost some of its swagger. A lot of it, I think, is because Wendy's franchises a lot of their restaurants. They put a lot of their restaurants out as franchises rather than being company-owned stores, which can dilute the brand. If somebody doesn't respect the brand the way you do, that can cause them to make your company look differently from what it's supposed to be. The obvious reason that you might franchise more is because you don't have to put as much, it's not as capital intensive. Like McDonald's, for example. A lot of people think McDonald's is a company that sells hamburgers, and really they're not a hamburger company. They're a real estate company. They own a bunch of property, they lease it out to the people that want to try to make money selling hamburgers, and they get a cut. So ultimately, just because Wendy's pretends to sell hamburgers, they really don't. They sort of license out their brand to people that sell hamburgers on their behalf, and apparently the plan isn't working quite well as it should be. Now, what I know that you guys will probably ask me is, what do I think about this company? What do I think about the stock? Well, I don't know. Let's take a quick look at the stock. In our stock market program, we have a stock market analyzer that I put together for you guys that'll let you put in any stock and kind of give you a breakdown. It's trained on sort of the way I view stocks and the way I analyze and break down companies. And so here's what I wanted to show you. I want to show you this chart on Wendy stock, and let me know if you can see the chart, if you can hear me okay. Here is the chart. Okay. So if you look at Wendy stock right here, you can see that the stock is down quite a lot this year. The past year is down by 52%. Last 5 years, if you were an investor in Wendy's, you lost a lot of money. 61% of their market value was killed. They're only a $1.6 billion company. So that means that they used to, I guess, be a $3 billion company or something, or 2.5 or more than that. And now they're sort of in the doldrums. Last 6 months, very, very red, 30%. Last 5 days, down 3%. Last month, down 3%. I'm going to tell you why I bought shares of Wendy's. It sounds crazy, but if you look at what most analysts are saying in terms of what this company is really worth, a lot of analysts are saying that Wendy's should have a price target of $17. They're saying that Wendy's is twice as valuable as the market is giving it credit for. And when I looked at the data and the information, I kind of said, I don't know if this is going to ever prove to be correct, but I like this stock enough to buy shares of the stock. A lot of it comes down to what they call execution risk. Execution risk is when they have this project fresh, is it going to be successful? Are you going to be able to pull it off? Are you going to be able to take advantage of your opportunities? One thing about Wendy's that's really interesting is they have a lot of free cash flow. And that free cash flow can be used for little things like a stock buyback. So if they bought back their shares, that right there would be a little bit of a share boost. I know Netflix did their stock split, I believe, to reward the shareholders who'd been holding the stock through a really tough time. And a stock buyback is another way that companies can, shove a little money in the direction of the shareholders. Also, I wouldn't be surprised if there was some optionality in the stock in terms of the ability to generate income by selling stock options on Wendy stock. So, for example, if you owned, let's see, the shares are super cheap. They're like $8. It's like $8.60 per share or something, right? So let's say I went ahead and I wanted to own, I don't know, let's say 3,000 shares of this stock for $25,000, I could sell an option on this stock that expires December 19th, and I could pick a strike price of say $9 and make 25 cents on those shares. So I could make $800 a month just from, or $750 from owning the stock, right? I could treat it almost like a real estate deal, and I'm just making income from owning the stock as opposed to waiting for it to go up. I don't know if I would sell all those options though. I think this stock has a lot of unmet potential. I don't, I really, I think the question, here's the thing, it's not investing advice. And the reason it's not is because I could be wrong, right? I just like Wendy's because I like it. I'm not saying that you should like it, but I like it because I feel that this stock has not been given the credit that it deserves. And I think the stock actually, as you're moving into a new economy, with a little bit more risk and all these other things, people are going to pay more attention to the fundamental values of assets as opposed to just picking whatever price they want to pick. Now, do me a favor, hit the thumbs up button, thumbs up, share, subscribe. Give me a yes if you can hear me. Let me know if you can hear me okay. I want to make sure you can hear me and see me okay. And my name is Boyce Watkins. I'm a finance professor. I wrote my dissertation on the stock market, and so I love to talk about stock market investing. And in fact, the stock market's the number one wealth driver on the earth, and I would encourage you to participate with that. We have Stock Market Tuesdays. If you text the word stock to the number 87948 and you visit drboycestockmarket.com, you can do a free trial in our Stock Market Investors Club, drboycestockmarket.com. All right, so here are a few other reasons why Wendy's is struggling. The store locations underperforming, declining sales and consumer spend. Consumers are struggling. You have what is called a K-shaped economy, which means that you have people at the top that are going up and people at the bottom are going down. Now the people at the top are, now it's not even a K. I don't know what letter that would be if it's like this and then down, like a K. Imagine a K where the top part of the K is kind of leaning a little bit. Because with the stock market declines, you have what is called a wealth effect, where literally people don't feel as rich as they felt before. And so a lot of y'all have been feeling funky rich because the market's been real good to you. And now the market's kind of taking a little bit of that money back, which is fine. Bitcoin is proving once again that it's not digital gold. Everybody thinks Bitcoin's digital gold, which means that it's going to operate like gold. That is not the case. If you look at gold this week, gold has, let me see, I'm going to look up the price of gold. And I'm going to show you what the price of gold has done. Okay. Even gold is kind of like, even gold is not behaving the way it normally behaves. But here's one thing you can kind of see. In the last week when you saw the market kind of dip a little bit, you saw gold go up a little bit, like less than 1%. I thought it would have gone up more than that. But really, a lot of that's because gold has gone up extraordinarily high this year, 56%. Look at that. And I think that has to do with the devaluation of the dollar more than anything else. But Bitcoin, oh my goodness, Bitcoin has been getting body slammed. Bitcoin is down to 94,000. Let me share my screen on Bitcoin, and I'll give you my assessment on crypto and Bitcoin in a minute. And let's see here. So Bitcoin is down to 94,000. You look at that year to date, it's only up 1% this year. Like almost all the gains that it had are gone. Like, I guess it was down at 75,000, went all the way up to what, 120 something or whatever the high was, 124,000. Now it's down to 94. So it's almost like it give it, then it take it away. Because it started a year ago, at the beginning of the year, it started at 93. So now it's at 94. 1 year before that, it started at, what's that, 91. Now it's at 94. So a lot of the gains that were made, they appear to have disappeared. But let me just tell you, I'm here to just tell you right now, I don't think that they're gone for good. I don't think that Bitcoin and crypto is dead. I don't think Bitcoin's dead at all. I think Bitcoin's going to reemerge as the beast that it is. Every indicator that I have tells me that Bitcoin will hit 200, 300, $400,000 at some point, assuming that nothing comes along and messes it up. Nothing's guaranteed, but I am a big believer in Bitcoin. I bought some more Bitcoin this morning. So I'm not telling you what to do, but that's my 2 cents. If you are interested in crypto, we have a crypto club in the Black Business School. Just text the word crypto to the phone number 87948, and we'll introduce you to our experts. So just text crypto to the number 87948. And also don't forget, I have a podcast on Spotify called the Dr. Boyce Breakdown. So just go to Spotify, look for my name. You'll find me there as well. All right. What else? Circling back on Wendy's, they're having trouble keeping up with the competition. Also, the costs, labor costs, ingredient costs, real estate maintenance, etc. All these costs are going up. Well, where's that coming from? Well, it's coming from partly the Trump tariffs. We act like the Trump tariffs didn't have an effect on the economy. I believe that it did. I believe it had an effect, but it had sort of a weird imbalanced ripple effect. And so the imbalanced ripple effect means that it affected some sectors differently from other sectors. And so that's why you have this weird up and down, and nobody knows exactly what the hell's going on because some people are doing well, some industries are doing poorly. One of the things we've been talking about a lot lately in the Black Business School is the flight to quality, where maybe now is the time to go ahead and take some of those gains from your high flying, wild, buck wild stocks like Oklo that were making ridiculous amounts of money. You remember in class we started talking about Oklo when it was $8 a share. Now it's up. Well, I think it's at 100. It was as high as I think 170, and when it was at 170, I kept repeating over and over and over again. I said, please, 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 just remember that this is not normal. Stocks don't usually give it up that easy. It's not this easy to make money. Everybody thinks that it is, but it's not. So now you're starting to see the other side of that. And so maybe pulling some of that money out and putting it towards some solid companies that I like. I think I bought a bunch of shares of Google. Google's going to make money no matter what. I just think Google's good at surviving the economy. And then there's a couple others that we talked about in class. If you go to drboystockmarket.com, I've got a lot of stuff. I put a list of things there that you guys can take a look at. Also, let's see here. In addition to that, in terms of the market this week, you've got issues going on with the Fed, interest rates signals. Is the Fed going to cut interest rates or not? That's a big decision. If they give an indication that they will, then you're going to see prices go up. If they keep acting what they call hawkish, where they're holding back, then that'll cause prices to deflate more. But again, in the spring, Trump is going to put his guy in that spot where Jerome Powell is. I think that's going to be a catalyst for the stock market short term. You've got some big cap companies with earnings reports this week, and so as they release their earnings, that's going to be a big deal. Nvidia. Oh, that's big. Nvidia is about to release earnings. That's going to be massive this week for the market. Keep an eye on that. If Nvidia comes back and says anything other than the world is bright and sunny and wonderful, and we're making more money than Jesus, then that could crash the entire sector. That could end the AI fairy tale. That could cause everything to kind of fall apart. So you may want to get positioned for that, batten down the hatches because tornado Nvidia is coming through. It's like the movie Friday when Big Worm drove up in his car and they played the song, or Debo rode his bike down the street and they played doo doo. Doo 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 doo, right? I don't know who was scarier, Big Worm or Debo. I think Debo was scarier than Big Worm, but Big Worm had all the guns, right? But still, it's the same idea, right? Nvidia is the Debo, it is the Big Worm of the economy, and when Big Worm gets to talking, you better pay attention. So Jensen Wong, I've made a lot of money with this man. If I ever meet him, I would love to hug him because he's made our family a lot of money because I bought Nvidia stock when it was under $10 a share. Now I think it's I want to say, is it 200? Is that what Nvidia is right now? I can't remember, but it's been doing quite well. And the beauty of Nvidia that's interesting to me as well is that Nvidia really didn't have a terrible month. It's at 191. And this month it's gone up 4.8%. So a lot of stocks in this market got hit this week pretty bad. Nvidia is maintaining its value. Nvidia is kind of the grown up of the AI bubble. It's the sturdiest anchor of all this. OpenAI is kind of leading the way and guiding people and sort of you know appearing to be sort of the next great thing in terms of hyperscalers and all that. But people are questioning that. People aren't sure what's really going to be of OpenAI. Nvidia is a company that's really generating real cash. They have chips that everybody wants. Microsoft, Google, those are AI players with real cash. But then you got the pretenders, the wanksters. You got the gangsters and the wanksters. The wanksters are Oracle. Oracle is borrowing money so they can pretend like they are the next Nvidia. You've got companies like CoreWeave. They're borrowing money so they can pretend to be the next Google, but they're not the next Google. Google is the next Google. So ultimately, the direction of this AI bubble is going to make a big difference in your stock prices. And as you all know, though, generally conversations about short-term movements in the market are really for entertainment purposes mostly. It's really entertainment. It's entertainment and education. You're being edutained. You get a chance to learn how the market works. You get to be entertained by watching things happen. But at the end of the day, what's the long-term play? The long-term play is to do what? Buy and hold and be consistent. Consistency is the name of the game, especially when times get crazy like this, because I can't tell you for sure what's going to happen this week or next week. I can give you big picture things, but nobody knows exactly which way the market's going to go. Okay. All right. So anyway, so if you want my thoughts on Wendy's, I did buy some shares in Wendy's. it might end up being a bad investment, but I don't know. I kind of feel like this company. I like that Project Fresh. I was like, Project Fresh sounds pretty good. I kind of like that. I like the way it sounds, and so if you look at Project Fresh, which is their turnaround plan, it makes sense, right? It sounds like what they're saying is like we got a great company and a great business. Our true value, according to the analyst, is $17. We have to extract that value, show that value, and use what we have to get what we want. And basically, with Project Fresh, they announced it October 9th, 2025. It's a comprehensive strategic plan to revitalize the brand. That sounds good. Reignite growth and accelerate profitability. So we're going to revitalize, reignite, and accelerate. I like that, and enhance shareholder value. So they thought about those words. They said, we're going to use active words: revitalize, reignite, accelerate, and enhance. Those are great words. Race. It's like race. Revitalize, accelerate, and enhance. Like, well, there's no C, but you get the point, right? So we're gonna race to the future. The plan's built on stronger franchise partnerships and under the One Wendy's approach. Okay, I think they're trying to get their franchisees to realize, hey, we all in the same gang. Remember that song? All right. The initiative comes as Wendy's acknowledges its valuation is below what the board considers acceptable, and that system performance needs improvement. So the board, which represents the interests of the shareholders, have pretty much put the management on notice to say you're jacking up our money. You're not protecting our wealth. You're not protecting our value. Shareholders have seen a 61% decline in their capital base that they've invested in Wendy's in the last 5 years. That means that if you participate, I'm not telling y'all to go. The reason I always tell you don't go with me, this is not investing advice. This is me telling you what I'm doing and why I'm doing it, is because I don't want you to go with me. And then if this turns out bad, I don't want you saying, "Well, I only went there because Dr. Boyce told me to." Don't you put that on me. You understand? Let me know. Do you understand? Yes, give me a yes if you understand that investing is risky, and this may not work. Wendy's may not be an undervalued asset. Wendy's may be an overvalued asset. Maybe the shit show has just begun. Okay, so the thing about investing is you got to understand is that that's the way the ball bounces. This is why you're not going to see me put more than 1% of my wealth in Wendy's. I'm not even putting 1%. It's more like half a percent. Okay, so get the fairy tale out your head, man. It's like getting married. People think getting married is all fun and that you're gonna love each other like girlfriend, boyfriend. It's just gonna be fun and games every day. No, marriage ain't for weak people. Marriage is for people that really want to do it. So if you ain't really ready for the work, then don't even sign up. Okay. So anyway, moving on. It says so. Some of the other things about this Project Fresh is they're gonna let's see they're revitalizing their brand. They want to strengthen Wendy's positioning by leveraging its heritage, improve marketing effectiveness. I mean, this sounds really good. System optimization, reallocate resources to boost average unit volume in the U.S. I don't know, this sounds a little bit. I'd like to know the specifics. Sounds a little bit, like they're using nice words. Operational excellence, that's a big one. That's really important. Enhance the customer experience with better technology, digital order tracker, ordering tracking, upgraded equipment, etc. Yeah, I like Wendy's. I think that's another reason why I want to own this company, right? I told you my little thing. Everybody has their, sometimes you have a personal reason for enjoying the stock. I remember being a little kid and I was at this place called the Wesley House and we would take little field trips. And we went on a field trip where we went to Wendy's. And when we went to Wendy's, I only had $2. And at that time, for $2, you couldn't buy a hamburger, a drink, and a fry. So I had to get either a hamburger and a drink, or a hamburger and a fry, which means I would have been thirsty, or a fry and a drink. And who wants to do that? You can't even get a hamburger. And I wanted cheese on my hamburger, which would have cost like an extra nickel or a dime or something. I didn't have the extra money for the cheese. So I remember just feeling so hurt in that moment and so deficient and angry that I could not get what I wanted. I wanted the big single with cheese and I wanted the large fry and I wanted a drink and I wanted to get some change back. That was my experience with Wendy's. So I grew up my whole life, I promise you, to this day, I drive past that Wendy's in my hometown of Louisville, Kentucky, and I look at that Wendy's and I go back to feeling like that little kid who couldn't afford to eat at that Wendy's. But what's so funny now, though, is that as a society, we've now concluded that fast food isn't that great for you, right? We figured out that processed food is the stuff that gives you the inflammation and the diabetes, tears up your pancreas, all this other stuff. So fast food has gone the way of alcohol and tobacco to some extent, which means that there's a cultural shift in terms of how people view fast food. So one of the questions I would really ask Wendy's if I was on their board and I'd lost a ton of money investing in this business is I'd say, what are you really gonna do to help deal with the perception that hamburgers and cheeseburgers just aren't that cool anymore? Right? That maybe you're gonna have to modernize for sure. You need the technology. You need to get a little hip. Make sure maybe let Wendy get a perm or something. I don't know what maybe she can like start reciting Cardi B lyrics on Twitter. But then also you've got to find some way to make people want to come in there who don't want to kill themselves with a cheeseburger, and I think that's the big question. Have consumer taste changed so much that they just drive past the fast food restaurants because people actually just don't want to die. I don't know. My other Wendy's experience was I actually worked there in high school when I was 16. I had a job there, and it was a real crazy job. I was this little 16-year-old kid, and you know how it is when you're sick. I was a 16-year-old virgin who was on the track team. I lifted weights every day, so I like girls. Let's just say that I had a lot of energy, but I couldn't get any girl to sleep with me. I was had virginity. I was trying to give it away. Nobody would take it, and there would be all these women that were it would be me and like a bunch of women and I because they need the men to scrape the grill, and I used to scrape the grill, and I would carry the big grease buckets to the back, and I would go carry the hamburgers up front, strong man stuff, right? And the girls would they were so pretty, and they all had these like super tight uniforms on. It was torture. It was crazy. It was terrible. But I do remember how much I liked the food, and I do remember I liked the little Kaiser bun when they had those. And I feel like Wendy's is just a franchise that has quality as far as I mean, if you eat hamburgers, if you eat cheeseburgers, I think Wendy's is getting kind of a bad rap. That's my point. I think that Wendy's is better than what it's appearing to be. I believe that this company does have potential. I believe that it can turn itself around, and I do believe that the not only are consumer tastes shifting, but I believe that the tastes of investors is shifting. I think investors are going away from kind of what you might call a meme stock culture, get rich quick, buy these companies that aren't worth anything and double their prices overnight to one where we're actually going to start paying attention to the analysts again. That's the world I'm hoping for. And if we tend to go into that world when the market starts to dip a little bit, which is the benefit of the cooling off period that you've been seeing lately. And if we have a crash, then it's really going to get good. People are going to start actually thinking before they invest. So if we go to that world, then I think I'll benefit from being a Wendy shareholder. And here's the thing: I don't need Wendy stock to go back to its former glory. I don't need Wendy stock to be worth what it's truly worth for me to make money. All I need is I bought the stock for $8.50 a share. If it goes to $10 a share, even realizes even a fraction of its value, touchdown. It was a good investment. Does that make sense? Right? Like literally, they do one buyback, then suddenly the stock moves upward, touchdown, we win, we've made money. So remember this, that's an important thing to understand. Your company doesn't have to be great for you to make a profit. It could still be a crappy company. It could completely fail at all of its goals. But if it achieves one or two little things that allow its value to be bumped up just a little bit, that's how you can make a profit. I made a massive profit investing in weed. I don't even smoke weed, but I know a lot of friends that own weed distilleries. I don't want to own a weed distillery. I went to visit one out in Vegas, and it was weird. They had to have armed guards guarding the cash which was in these vaults, and I said it was like, wow, you're operating like Nino Brown. That's kind of crazy, but they're not illegal. They just had to do it that way because they're not integrated into the banking system. So I didn't want to do all that. I don't want to carry around a gun and worry about somebody robbing me or have to pay for everything in cash. So instead, I bought a cannabis ETF. It was YOLO. And YOLO, I made a miserable mistake when I bought YOLO. I bought it when it was in its 20s. It dropped to the teens. It dropped below 10. It dropped down to $3, $2 a share. But you know what? My original thesis held true. I just always believed at some point we're going to legalize cannabis. So I kept buying and buying and buying. I was doing dollar cost averaging. So I was just buying the dip, buying the dip, buying the dip, buying the dip. Every time the price went down, there was an opportunity to buy more shares at a lower cost. And then the stock just booped up just a little bit. It went up, maybe went from $2 to $3 or something. I don't know. But suddenly that all that negative investment, all those losses suddenly got flipped just from one little price movement. So what I would say to you is remember that Making money on stock isn't about buying a good company. It's about being able to sell it for more than what you bought it for. That's it. That's it. It's not you don't need the company to be a good company for you to do that. Now, long-term investing though, there are people like Warren Buffett who will say that that if you're a long-term investor, you should buy good companies with strong earnings, good cash flow, growing dividends. A growing dividend is a good factor as well. And that's important too. But then sometimes you just have to sell it for more than what you bought it for, and then you win. So sometimes a great company could be a terrible investment, and a terrible company could be a great investment. So why am I investing in Wendy's? Because I kind of want it in my portfolio. Um, I had these childhood connections to the company. I think the brand is better than it's getting credit for. I think that I believe in this Project Fresh. I think that they've got a chance here. They got a lot of capacity. They have a lot of extra cash flow that I think could be applied to things like international expansion. They don't have a strong international footprint. And if any of these little things go right, I think that it gives Wendy's a chance to kind of pop up a little bit. And if that doesn't work, you just have the manager use some of that free cash flow to buy some shares back. And that right there just mechanically, mathematically ends up increasing the share price. It's kind of cheating. It's like kind of like financial Ozempic, right? You know, people take Ozempic because they don't want to go to the gym. Well, it's like kind of like that. You do the buyback or the stock split to give your shareholders some return on their investment, and then it makes them happy because if you don't make shareholders happy, then it is your ass. That is what gets managers fired. So I think these managers are just fighting for their job, and let's hope that they keep it. All right. Now, my name is Dr. Boyce Watkins. I'm going to finish up for today. By the way, Wendy's is run heavily on a franchise model. I think 84% of its stores don't belong to the company, and franchising is a great way to expand your wealth. And what people don't know is that you can actually have franchises even if you're not a $1 billion company. And we have a franchise program in the Black Business School. I don't talk about it that much, but I want to talk about it now. If you it's part of our Black Money sequence, Black Money 101 through 106, and 104 is franchising. So if you go to blackmoney104.com, that's blackmoney104.com, you could take a look. And franchising is great for you that those of you that want to scale a business, or maybe you want to go buy a franchise as a family, get informed, understand how it works, listen to people who know what the heck is happening in this industry. And there's a lot of opportunity there, but there's landmines there, the types of franchises that you want to look at, the types that you want to avoid. So we're encouraging our students to look at franchising, either franchising the brand you have or buying into an existing franchise as kind of a shortcut to business ownership. Second of all, if you want to learn more about stock market investing and join our stock market investors club and come and ask me questions and talk to me on Tuesday, feel free to go to drboycestockmarket.com. That's drboycestockmarket.com. So, and also we have financial flashcards and workbooks for kids on stock market investing. So if you go to drboycebooks.com, you can take a look at some of that as well. That's drboycebooks.com. So have a good day, everybody. God bless you. Thank you so much for listening. If you could hit the thumbs up button, thumbs up, share, subscribe. I will check back in with you again soon. I just thought I'd come in and talk to you guys about what was going on with Wendy's because I just thought it was interesting, and I hope that you would too. So have a good day, everybody.